Hello guys, welcome back to another episode of Top Down Analysis. So in this episode I'm going to break this pair down, how we analyze this pair from the weekly time frame all the way down to the lower time frame for entry. So we could see that price came to this support weekly level, this level over here. Price came here and reversed. So when price was coming to this level again, we were expecting some kind of price action through candlestick patterns, showing us that sellers are closing their short position for buyers to step in. But when price came to this level, all that we had was a bearish engulfing candle. There was no wicks, no shrinking candle. There was no price action. So we dropped to the daily time frame to see inside what is happening at this key level. So when we drop to the daily time frame, that's what we see. We saw multiple breaks or multiple rejection of this particular support level. We had rejection 1, rejection 2, rejection 3, and rejection 4. Shows that sellers tried 4 days to push below this level, but they couldn't. Buyers held the level strongly, so that gave us a bullish bias unconfirmed. So we drop to the 4-hour time frame to confirm this bullish sentiment at the key level. So when we drop to the 4-hour time frame, this is what we saw. We had this nice trend line here, and not just trend line, the market also made a falling wedge. And now price broke the falling wedge, so we took our entry here, our swing entry here, and then we put our stop loss below. See, this is the main reason why you should not put your stop loss too tight to choke the trade. You should always set a stop loss to give room for potential swings. So we targeted 1 to 3 or the next oh, look at what I just did. Long position. And we targeted 1 to 3 or the next key level, and boom, price hits our TP over here, 1 to 3. Now this is how we also take it a step forward. So have you seen, since our directional bias has been established and our directional bias is bullish, that means that we are going to look inside this entire leg in the lower time frame for a continuation trade. This entire leg, we are going to look inside this entire leg in the lower time frame. So I dropped to the 30-minute time frame and I waited for price to reject the 50 EMA and then daily pivot for a continuation trade long. So price came, rejected the 50 EMA and then the daily pivot. So this is how so you can go to indicator and type pivot, it will come, and then so this is the setting you must do. The type should be traditional pivot time frame daily. You have to set the number of pivots you want backwards. It depends on what you want, and you have to untick all this SR level, untick all of them, and let it be or leave only the pivot level, leave only this level, untick all the SR levels and leave only the pivot level. So when price came and reject the 50 EMA and then the pivot level, then we took our entry long at this candle here, and we put our stop loss below the lows, and we targeted 1 to 3 again. Yes, have you seen? So before you take pivot entries in the 1 hour or 30-minute time frame, you must first establish your directional bias. So in this case, we establish our directional bias through weekly support level, daily multiple reaction or multiple rejection of the support level, showing price is unable to breach the level. And then the 4-hour time frame, we had trend line break and also a break of the falling wedge that gave us a bullish bias. So we actually took a swing trading when price broke the trend line, and also because our directional bias, which is bullish, has already been established, we dropped to the lower time frame to look for pivot entries long. Yeah guys, so this is a top-down analysis for you in a nutshell. I hope this video has helped you to broaden your understanding when it comes to top-down analysis.